Okay, good morning, everybody. My name is Art Roberts. I am a volunteer for the SCORE chapter in Rochester, New York. Um, we have a program today that we have used over the last couple of years, and instead of it being just within the greater Rochester area, we've invited people from all over the state. So a little later, I'll show you some of the chapters in other parts of the state. But we've got people today from the North Country. We've got people from Hudson Valley. We've got people from Buffalo, Niagara area, across the whole southern tier of New York, Binghamton, Wellsville, Olean, places like that, and throughout the Finger Lakes, around Rochester, Canandaigua, Lyons, and places like that. So it's great to have everybody on board here, and I think you'll really enjoy our presentation. We'd like to just cover a couple of things about SCORE. Kristen, if you could change the cell for me, please. First of all, for those of you that aren't familiar with SCORE, back up one, please. Kristen, slide 2, please. There we go. Okay. SCORE's been around since 1964. It's a volunteer organization that is a partner of the Small Business Administration. SCORE's got chapters all over the country. Rochester, the chapter that I'm a part of, is chapter 23, which was one of the first chapters formed back in 1964-65. It's a nonprofit resource to the partner to the the U.S. SBA, and there are about 10,000 volunteers that provide business counseling to people that are interested. The counseling, the one-on-one mentoring, we call it, is in person or online. During this period of COVID, most of our counseling is online. But hopefully before too long, we'll be able to get back to in-person type counseling. All that counseling is free and confidential. Even though we say one-on-one, if you've got 2 or 3 members of your business that want to work with us, that's fine. We do workshops like the one we're going to do today, workshops, seminars, and events in the communities around the chapter area. Right now, because of the technology, we're able to do these webinars and Zoom meetings and so forth and cover a lot of the same material that way. There are tools and templates, hundreds or even thousands of recorded webinars that are on the SCORE website. The one I show here is greaterrochester.score.org. But the general website is score.org. So those are available to you anytime and also free of charge. Kristen, you're going to just jump the next cell, please. Some of the things that we have online are these, like I said, templates, tips, blogs, and so forth, and they're available 24/7. There are literally hundreds of those. And I think they're indexed and libraried so you can determine what's important for you. So what we always say to our clients, you don't have to go it alone. Mentoring provides you the opportunity to talk with somebody as a business coach. In Rochester, we have about 75 mentors. Many of the chapters around the state have a similar number and a whole variety of expertise. So we've got people that have marketing, sales expertise, people that have online digital expertise. We've got people that have accounting and legal and so forth. So there's just a whole variety. And if the mentor that you're assigned to needs to bring someone else in to help, they often do that. As I mentioned, we do the workshops and the online resources as well. So let's just take a look on the next cell of the people who are going to be with us today. We have Marlene Datillo, who will be our main presenter and do the farm transitions presentations. Marlene is a partner with Keystone Financial Partners Group, and her email is here. These cells will be available to you. So if you want to follow up with questions or anything later on, you'll have the email address of the various people. The presentation that Marlene will put on today was constructed by Mass Mutual, who is a partner of SCORE. And I want to emphasize that this is not a sales pitch. This is truly information that we feel is important for all business owners, and in this case, particularly those people that are involved with agriculture. Kristen Ragona, you've heard me say Kristen. Kristen is our webinar manager. She's also a certified SCORE mentor in the Rochester area, and she'll be helping us make sure that we stay on task with the webinar. Helping also is Tamara McDuff. Tamara's going to manage our chat box for questions. If you have used webinars before, you'll probably know the feature, but if you haven't, look at the bottom of your screen. You'll see there is an icon that says chat. If you click on that icon, you can put a question in to the chat box. Tamara will manage that chat box and provide those questions to the speaker so that we can have live questions that you've got on your mind presented to the speaker during this session. That will also be available at the end, because we'll have a panel of people at the end, and I'll talk about that panel in a minute, but that chat session will also be available during that period of time. Also online is Frank Reynolds, who's also a member of the Rochester chapter, but he's the assistant district director for all of our upstate SCORE chapters, and he's responsible for overseeing the agricultural projects for SCORE in upstate. During the panel session at the end, we'll have two additional people. Lori Shipman, who is a farm financial consultant for New York FarmNet, will be online, and she will be able to talk about some of the services that FarmNet provides along this line of succession and transition. Also on the panelist is Ryan Hollings, who is the Senior Vice President for Commercial and Agricultural Products for Lions National Bank. We wanted to have even though Lions doesn't have offices all across the state, we wanted to have a banking representative in case questions come up about valuations and just general bank questions as we deal with succession. So those will be the people that are going to be with us today. We're going to get going right now with Marlene, but I want to encourage you to throw a question in chat if you have one. Don't be bashful about that. And at the end of the whole webinar, we'll put together a little. We have put together a little questionnaire that gives us a feel for gives us a feel for the evaluation of this program. These are the chapters across New York State, and as I mentioned, these cells will be available, and we'll send them out to all the participants, and you can see the website address and phone numbers associated with each of those chapters, and they will be glad to talk to you and provide a mentor for whatever situation you feel you need some help with. So with all that, I want to turn over the presentation to Marlene, and hopefully everybody has a great day and we have a good webinar. Thanks. Okay. Marlene?
All right, great. So Art, everybody can hear me, right? I am going to share my screen. The one thing I wanted to mention is on the one slide, my email address is actually M.A. Datillo. They use my middle initial. So, okay. And I think I noticed in Lori's, it's Rochester, .rr. It should be rochester.rr.com for for email addresses. So for
Okay.
anybody that kind of
Good
heads
catch.
to the website afterwards, I just wanted to bring that to everyone's attention.
Thanks,
So
Marlene.
a little bit about me. This is about the 5th time I think that I've actually presented this particular presentation to individuals in the agriculture industry. And it's really important for those of us who are working with farmers and individuals in the ag industry that we really bring you up to speed on this topic. You know, the country, everyone around you, and particularly those in our government and our regulators are really worried that farmland is going to be sold to developers. Equipment's going to be auctioned off for cash because farmers have not figured out a way to particularly pass their farm to another generation as a working farm. So I can't give this presentation enough. And I really hope that you will take some notes. You don't have to gather all of this. You know, there's a lot of information here. It's like swallowing the ocean. Don't worry if you don't get it all. I believe there's a way for Art and the staff at SCORE to get you a copy of the presentation if you wish to have one. But more importantly, just take 1 or 2 ideas away from this today that will allow you to at least continue or I'm going to just hold on. I'm just making sure there we go. I want to make sure that you at least get 1 or 2 bits of information out of this so that you can either start or continue along with your planning. So with that said, I think I'd like us to launch the first poll question, Kristen, because I do want to get an idea of where we are. And what we'd like you to do is, I'm going to read this poll question out loud. I'd like you guys to check a box, hit enter. We'd like to know exactly where you are in your succession planning. This is confidential. We have no idea who has answered which question, so don't worry about that. Number 1, what is your primary reason for attending this presentation today? A, I know nothing about this topic. If you're new to this, mark A. B, I have family members, I have partners that will take over the farm or my ag business. I'm looking for some ideas. I've started some succession planning, but I need to keep this in motion. C, we have a succession plan in process, but for one reason or another, we've hit an obstacle, we've stalled. I'm here to maybe see if I can't get an idea to get this started. And D, I'm an affiliate business. I'm here just for educational purposes. Maybe you're just here to kind of figure out what we're telling the ag business these days and what information might be out there. So if you guys can all sort of click and answer there, Kristen's going to give you a few minutes to submit your answers, and then we are going to share the results with everyone. Okay, here we go. So 29% of you said, I really don't have any concept of this, I'm new. 7% said we've started. 29% said they are stalled or they're looking for some ideas to move forward. And 36% of you today are actually an affiliate business. Okay, so we're going to close this poll out. Now, the importance of goal setting. I am often amazed at the farmers who think that they are going to somehow pass to the next generation, but they haven't set any goals. They don't really know who's going to take over the farm. Maybe I have an idea who's going to take over, but I haven't necessarily communicated to anyone yet. I haven't prioritized what needs to be the plan and how it's going to roll along. And I haven't set any goals, right? And there's no timelines that's been necessarily set up.
Marlene, excuse me 1 second. Can you restart your video? I think you still had it turned off.
Okay, I am sharing my screen. Okay, can you see the share?
Yes, and you're up as well.
Okay, yeah. I was just going to put my picture up while I'm presenting, if that's okay.
Oh, that's fine. That's fine.
Okay.
Thank you.
So if I hit stop video, does my screen still share?
Your screen shares and it's just your picture.
Okay, perfect. All right, so let's do that. Okay, perfect. All right, so I'm trying to move my cursor. There we go. So here's our typical timeline. We start out by testing the water. So what I'd like you guys to do is tell, you don't have to communicate this to me, but sort of think about where you are on this timeline, because then it tells us how long it's going to take you to get to the withdrawal phase. Testing the waters. I've had a conversation with a couple of my family members or someone who might be an interested party in helping me continue to run my farm as I exit. And maybe I've gotten to the next step where I actually have a commitment in place and we've started to draw up some goals and some written documentation. Or I could be in the establishment phase. I've actually been mentoring the next generation. We are actually in the process of moving towards our actual older owner, our older generation is getting ready to withdraw. So what is succession planning? It's the process of planning for the day a business owner decides to step down from their leadership role in the business. Here's what we found really happens. It's actually the process of developing a written plan for the day a business owner decides or is forced to step down from their leadership or ownership role in the business due to a voluntary or an involuntary departure. The reason you're here today is we don't want it to be forced and we don't want it to be involuntary. So what's important about this presentation is 30% of businesses don't make it to the second generation, or actually 30% do, only 12% make it to the third generation, and only 3% make it to the fourth generation. So this is for all businesses, not just farming. There are many things that you have in common with other businesses, such as small, maybe tech companies, small manufacturing companies, and businesses that are related to the agriculture industry. Some more facts. 83% of all business owners have no written plan. 49% have done no succession planning at all. And this was a statistic back in 2012, which was the last time that we had a statistic like this. But at that time, there was going to be 91 million acres of land that was expected to transfer to the next generation in the next 5 years. So there is a lot of land that needs to be planned for. So again, some more statistics. For some, the process has begun, but like some of you, 29% answered they haven't seen it through. So 60% have identified some financial needs. A little less than that have discussed with family. Some have discussed with some other internal parties. Some have built some sufficient business value to be passed. Some have actually hired management, and some have obtained some business valuations, all right? But still, that's less than half. So what goes into a good succession plan? Well, first of all, we have 2 green squares there. It has to be documented and it has to be communicated. I have had at least 3 farmers sit in my conference room and tell me that they know who's going to take over their farm, but they haven't communicated it to them. And I always find that to be an interesting first step. If there's a place where things get hung up, it seems to be when we start to communicate with the next farming generation. Hey, I'm going to pass you to the farm, and all of a sudden issues called family dynamics start to surface. And sometimes those are the hardest pieces of this puzzle to get solved. And this is also where I tend to really like to use a SCORE mentor. It is not uncommon for us to bring the family together in a separate conference room, whether it's a SCORE conference room, mine, maybe it's a Zoom call, and we're going to talk about all of the things in these boxes. What are the goals? Who are the successors? What's the ownership going to look like? And how do we intend on transferring it? What do the finances look like? And what's the management of the farm going to look like? I am a money girl, but I'm amazed at the number of times that I sit with a farmer and try to figure out family dynamics. This is where really someone from SCORE might be a little bit better than someone like myself. I really should come in once we start to talk about the actual agreement, how it's funded, and how shares are transferred. But you're in that communication stage. You really have to be careful about making sure you have some outside mentoring help. Here's some of the things that surface during those meetings. Incoming
Hey,
owners.
Marlene?
Yep.
We do have a question and it kind of goes to succession planning.
Sure.
So the question is, they need to get their father-in-law's name off of the farm property. And they wanted to remove his name to protect the farmland from being taken by a nursing home or such. So how do they do that?
We are going to talk a little bit later about Medicaid planning. So that's a great question, and I will address a little bit more in detail.
Okay, I'll make a note of it.
Yeah, but you are right. So I'm assuming in this case, and it doesn't tell me, that my 82-year-old farmer is 100% owner. If you want to type back and just let me know that, you know, I think you're in a unique situation here. You may have to go to court and actually obtain guardianship over your farmer. In other words, if you feel like he is not able to run the farm himself, guardianship is a very emotional type of legal setting where we go into the courts and we say, this person can't handle the farm anymore. That's the most drastic way to do that. The ideal way is for our 82-year-old farmer to actually sign over at least 51% of the farm to someone else. That is a legal transaction and should involve an attorney. You've talked about a quit claim deed to remove his name. You're leery of doing this for a trust. We would still have to incur some unforeseen expenses. He won't go into a nursing home. Well, you're right. You might not have a choice. So I will tell you you've hit on about 6 different legal issues there. So that's a very complicated question. You need a good attorney to help walk you through the legal transition of the stock. And you need an attorney who also has a mindset towards Medicaid planning and knows the rules over what assets Medicaid can take and what they can't. You're also looking at a 5-year look back rule for Medicaid. So whatever you transfer now is still going to be part of the estate when they look back 5 years from today. So you're in a little bit of a pickle there because of that 5-year look back. The reality of his situation of going into the nursing home is he's either going to fall, he's going to have a hospital stay, and the hospital is going to say he can't go home and live by himself. That is when there's going to be either an assisted living or a nursing home event. And unfortunately, if he is kind of cognitively in a good place and can make his own decisions, you are at sort of his mercy to sort of hand some things over. I would get him in front of an attorney who can scare the bejeebies out of him. That would be my first sort of recommendation. And I do have some really good Medicaid planning attorneys. And I would also talk to, when we get to the panel, I'm going to ask the panel to kind of make a note to see if they may also have some really good farming estate planning attorneys for you. Okay, I am going to keep moving on with this slide. Okay, so we talked about having our family members in the room. And here's some of the thoughts that come out of the incoming owners. Man, that older generation, they are not letting go. Wow, is that the question that we just got, right? Does the incoming owner have the equity to bring to the farm? Can they actually buy me out? I mean, we might be feeding a lot of families now. Do their projections show that they can make their payments and make a living? Do they actually know how to run this farm? And maybe should there be an off-farm income to support the family? Outgoing owners, they're thinking, man, this young generation, I don't know what the heck they're thinking, but they have no way to run this farm, no management ability. I can't afford to comfortably retire with feeding the next 2 or 3 families that might be coming in. We now have, family dynamic issues and, geez, can this farm actually support multiple families? So there's a lot that goes into this. Here's the reason farms fail. And I think what we're going to do is, after I read through this list, I'm going to have Kristen launch the next poll question, because I want to know which one of these is your issue. I don't know what my exit options are. There is not sufficient capital to actually make the transition to the next generation. We've just, failed to prepare for the next generation properly. I haven't done any adequate retirement planning, and we haven't done any adequate estate planning. So, Kristen, I'm going to let you launch the next poll so that we can give you a few minutes. Who have you, I'm sorry, this one should be, actually, let's go to poll number 3. Okay, what is most likely to affect your transition? Again, A, not knowing my options, insufficient capital, is money your issue, failure to prepare for the next successor properly, inadequate retirement planning, or inadequate estate planning. So, okay, I think that's good. Let's see what our results look like. All right, so 36% of you said you really don't know what your options are. 21% said it's a money issue. 21% said we've just failed to prepare the next generation. 21% inadequate retirement planning, and 14% said estate planning. Okay, perfect. Let's close that out, and I'll go to the next screen. So, not knowing your exit options, in a recent poll, 10% said that they don't plan to ever exit the business. So, when I asked the question to the farming family sitting in my conference room, what do you think this looks like? And what I'm trying to figure out is, what are your expectations? What do you know? What do you don't know? I'm trying to figure out the answers to the questions that you just asked. I'm going to tell you, I am always amazed. The answer is usually, I'm going to die in the farm fields on my tractor. I wish I had a $5 bill for every person that told me that's how they were going to die. I've had a couple of people in the construction industry that have said, hey, I'm going to die on my backhoe. So the idea is, I'm not going to retire. Well, as we know from the first question that we got today, that's not always what happens. You get sick, or you might pass away too soon. And I don't care if you do keel over on your tractor, but when that happens, I want to make sure everything's in place for the next generation. 66% said that they don't know all of their options, very similar to what you just said. Here's the other thing. When we did a survey back in 2014 with the USDA, and I will tell you that we are just starting to get new and current results. So this is a somewhat of an old survey, but 48% said they're going to keep their assets in a trust because they feel a trust is the easiest way to transfer to the next generation, or at least keep the farm in the farming industry. 23% said that they are going to sell to a non-relative. 14% said they're going to sell to a family member, and 14% are also going to gift to a family member. So if you don't know your exit options, you can transfer or sell ownership to a vested family member. You could liquidate your farm assets, auction equipment off, sell off your land. The reason we're here today is we do not want that to be one of your exit options. You can rent or lease your land and equipment to another farmer. You could sell or contract the property out for farming as well. Here's one of the biggest issues that we see with farmers. And again, I have a lot of manufacturing firms. I have some small technology companies. I have a number of small companies that support the agriculture industry. But this picture right here is unique to farming. It is not uncommon for the oldest first generation, and I'm going to refer to the first couple generations being these top tiers up here. These guys are still alive, but in wheelchairs and canes, they're probably not super active on the family in the farm, but they're taking income from the farm. And this becomes the problem. If the farm revenue does not grow as the generations grow, we have an issue. One of the things that I'm always looking for is, okay, do I have any life insurance on my older generations? So at least when they do pass, there is a large lump sum of tax-free cash coming into the farm at that generation's death. And unfortunately, you know, if it wasn't thought of a while ago, it is a little late to bring life insurance to the game to some of my older generations. But I am now working, and I'm going to tell a couple stories about this farm. It was the first farm I was introduced to by a CPA. I have been working with them now, I think we're going on about 8 years. And we now have introduced the third generation into the farm. We have a young man who is been working on the farm a little under 3 years. Just had my review with them in November, and I said to the second generation, hey, I want to buy a big old life insurance policy on my young third generation. Just allow me to buy some term insurance. It's not going to cost a lot of money. Let the farm pay for it, and God forbid something happened to him, this will be an influx of cash to the farm. But more importantly, let's buy it on this young man while it's really inexpensive. As he grows through the farm generations, that life insurance will grow with him. Hopefully we can at some point buy a policy that can also generate cash, which the farm could borrow from if it needed to. So just an idea on considering life insurance. If you haven't evaluated life insurance, you want to do that. In this particular farm also, one of my second generation members, we have a series of brothers. One of the brothers was not insurable, but he had bought some personal insurance a long time ago. And what we did is we transferred the ownership of the personal insurance to the farm in order to create the funding for the buy-sell arrangement. So there are many things that can be done with life insurance, and just kind of make a note if you have any questions on that later. So 1 out of every 4 successors isn't aware they're a chosen successor. The most recent farm that was in my conference room said to me, my son is working in the business, he's going to take over the farm. And I said, have you had a conversation with him about what that looks like? No, we have not. Oh my goodness. Again, I can't believe how many times this happens, but communication is absolutely crucial. 1 out of every 3 business owners have not established a successor development plan. 1 out of every 2 business owners is not confident that the successor is prepared. So here's what we know. We have to establish some clear guidelines. Listen, this doesn't have to be a fancy set of guidelines. Set up a little yellow tablet and say, here are some of the things that I think the next generation coming in does not know and they need to know. Take it one at a time. Again, this is where a SCORE volunteer can help you set up some of these items and continue some training. You want to determine their leadership needs. You want to make sure there's some sort of plan in place. And again, like I said, you want to encourage a mentor. So, inadequate retirement planning. Because I'm the money girl, I probably get involved the most with retirement planning and also Medicaid planning. So if you don't have a retirement plan in place, these are your 3 options. You better make certain that you receive full value for your farm so that you can retire and sell it to another farmer, we hope. Or your children are willing to pay you a salary until the day you die. Or the new farmers can run the farm successfully and pay you some rental income. So here's some of the golden rules for retirement. And this is where I get talking about some sort of cash flow modeling. I sometimes will work with the older generation and I'll just do kind of a quick retirement plan. I just look at what's your Social Security payments? Do you have any retirement dollars set aside? What do you need in order to live your life in order to not receive income from the farm? And then I try to build a retirement plan to figure out where that money's going to come from so that the farming income can go to the generation that's actually working the farm. And we call that a cash flow model. So I think the next slide we're going to talk about is going to be business valuation. So what I would like to do is have Kristen launch the next poll question for you guys before I start to talk about business valuation. Okay, have you completed a business valuation for your farm or ag business? In other words, has anyone ever come in and told you what your farm is worth? Yes, we did a formal valuation and it is updated on a consistent basis. B, yes, but it was informal between family members. C, no, we have not valued the farm, but we do know about what it's worth. Or D, nope, and we have no clue. Okay, so 31% of you have done a formal valuation, and that is actually generally good. 15% of you said yes, but it was informal. So 31% said no, but we have an idea. And 23% said we are clueless. Okay, I have to tell you that the 31% is great. And I'm wondering if some of that in question A comes from the fact that sometimes for banking and some legal work, a formal valuation needs to be done. And I know we were going to stop for questions right here, and I do have one in the chat box that that I'm not sure if everybody can see the chat box or not. So I'm going to read this. My recent effort at estate planning was a disaster. I obtained an opinion from a local property assessor that placing my property in a living trust would not impact property tax exemption for STAR and agricultural assessment. In fact, the year after transferring the deed, this was the case. Now the assessor is indicating the agricultural assessment will no longer apply if the trustee does not have the agricultural income. The farm business is a single member LLC. The base property is only 5 acres, with the remaining lands being farmed under lease agreements with neighboring properties. I'm now being forced to revoke the trust and return the property deed to my name in order to retain the agricultural assessment. How can I otherwise protect the real estate in the event of my disaster or death? The LLC transfers to my child upon the death, who is also the trustee. Well, first of all, you know, good for you because you are learning a lot, and it has been painful what you've learned, but you know, you made an attempt to go out there and solve this problem, and I just have to give you great kudos for that. I would tell you, I think the problem here is you started out with the property assessor giving you estate planning advice. And I would say that has to come from an estate planning attorney. A living trust is put into place in order to avoid probate most often. So I'm giving you a very general answer because remember in the beginning, in my disclosure, I'm a money girl. I'm a certified financial planner. I'm not an estate planning attorney. I do my best work when I am working with a CPA and an estate planning attorney and myself. That generally becomes a really good team for people. So I think what you need to understand is a living trust does not avoid any sort of, it's a revocable trust. So it doesn't protect you in cases of, you know, avoiding estate tax and actually sometimes transferring to the next generation. So a living trust is somewhat of a weak tool, in my opinion. And I find that when I read that attorneys are offering free dinners with presentations, it's generally on the living trust side, and they are not the most valuable of tools, particularly for a farm. Avoiding probate is not what you're trying to do. You're trying to do something else. So I think you probably do need to unravel the living trust, and you probably need to start over with something else. Oh, it says it was actually an irrevocable trust. Two estate planning attorneys also thought the eligibility for the ag assessment would continue. The problem is the local assessor. Wow, I don't know that I even have an answer about that. So in that case, you know, you may have a situation, and if it's irrevocable, you probably can't make a lot of changes to that trust now too. I am not sure what to tell you, but I think that is absolutely a legal issue. And if the problem is with the local assessor, you may have to go over his head to get some explanation. And Aura Rothfuss, I'm not sure who you are, but you said, don't exit the trust without doing more research on the ag district exemption. Rented land can qualify for an ag exemption of taxes. So I would say let's bring that to the panel discussion, because that's where we're going to open up the floodgates and allow people to talk. So if you can sort of bring that back, and if somebody can address this issue other than me, I'm happy to step away from this one. Okay, so we're gonna leave questions. You know what, Kristen, what I'd like to do though is I'd like to go back to poll question number 2, because this brings up something I often think is really important. If you guys on a piece of paper right now, if I said to you, and this is a question I ask when people enter my conference room, who's on your planning team, right? So here's a poll question for you. Who have you placed on your succession planning team? And I would just call this your financial planning, your financial security planning team. A, we have a CPA, we have an attorney, we have a financial advisor, and we have a banker. Or B, we have a CPA and a banker. We have a financial advisor and someone who prepares the family or ag business tax return. Or D, we do everything ourselves and we don't have any professionals working with us. So let's get a feel for where you guys are with your team. And I apologize, I skipped over this in the beginning. All right, so 27% of you have a really good team in place. Congratulations. C, 36% of you have a financial advisor and someone who does the tax return, and 36% of you have no one. I would tell you that I think a CPA, a good CPA who works in the agricultural industry, and this is one area where I could provide you with an excellent name, as I have gotten most of my farm referrals from this CPA to do the pension work. I do have some good tax attorneys for you, and I have a good Medicaid planning attorney, but when we get to the panel, that might be something we also want to discuss. Okay, let's close that out. And I do want to make sure that I finished on time. So I am going to step up my pace here a little bit. So there are several different ways that you can value a business: book value, market value, capitalization of earnings, discounted cash flow. I am not a valuation expert. I can read a business valuation and I know what to do with it from a financial planning perspective when it's completed. But I do think it is important for us to figure out some valuation. With farms, this income replacement value generally seems to be where they would like to go. In other words, all we want to do is get the value of the farm to be whatever it needs to be in order to create income replacement for everyone that is receiving revenue, for all the family members. Salary, maybe some pension, profit sharing, employee benefits, company paid car, travel, meals, so on and so forth. If you are going to retire or leave the farming business and the farm is paying for all of these assets, we have to figure out how to replace those for you. Generally, there is some sort of gap to fund. And that's what we do. We try to figure out what is the value of the farm worth. And then the second thing is, what do we do in order to fill that gap? Mass Mutual has developed a software program that I can utilize for any closely held business, including a farm. We do not charge a fee for this, and it's called the Closely Held Business Valuation Tool. And we look at 5 years of tax returns, and we simply take numbers from the tax return, place them into this software program, and we can give you the book value, the capital value, all of those different areas of valuation that we talked about 2 slides ago. This 12-page report will give you each one of those values. For the first farm that I was introduced to, after I'd put the pension plan in place at the request of the CPA, on my next annual review, I said to them, you know, what have we done about succession, right? I had 2 generations already in the business, and we needed to first figure out, okay, we have to have a value. If we're going to write some sort of agreement, we need a value. I put them through this program. It is not formal. The IRS does not recognize my software if there's going to be formal gifting. It was, however, a great tool for at least having the family members look at something that was formally put together, right? It was a program. It did give us values in each one of the areas, and it allowed the family to decide on a value. And then in turn, we wrote a succession planning agreement that would be reviewed every 3 years. So I want to let you know that that is available to you. And at the end of this, when you go through your final questionnaire from SCORE, if there's something that you would like us to follow up with you on that, we can do that. So comfortable retirement. I want to talk a little bit about having a retirement plan. Like I said, my first farm, I was asked to go in and to set up a retirement plan. And I'm happy to report to you that, you know, after going back in year 8, the second generation has built up a very nice bucket of cash that is personally owned by them and not accessible by creditors. And the third generation that I just spoke about before is now also in this retirement plan and receiving a match from the farm for contributions. So I'd like to launch the next poll question so we can talk a little bit about retirement plans. Okay, does your family have a formal retirement plan in place for members and employees? Yes, we have a 401k with a matching contribution. Yes, we have a simple plan with a matching contribution. No, we don't have a formal plan, but we do take advantage of individual IRAs, Roth or traditional. Or no, we don't have any dollars saved for retirement. So I'm going to give you guys a few minutes to answer that poll. Okay, so 0 have a 401k, 9% of you have a simple. Wow, 82% have IRAs and 9% don't have anything. So my CPA was very specific when I was referred into my first farm. And Kristen, you can close out that poll. Thank you. She said, listen, this farm is not going to pay fees to set up a plan. Marlene, go in and set up a simple plan for them. And the government gives us the ability to do just this. If you want to go Google this, you can do a 5304 or a 5305 IRS agreement. That's the code of the IRS that pertains to simple plans. And literally, it is like a 3 to 4 page document. I think it's the shortest document that the IRS has ever allowed us to use. And I can simply go in and say to the farmer, hey, you know, who do you want to be eligible? Mark a box. You have to do some sort of match. It can be a match for everybody at 2%, or it can be only for those who want to participate at 3%, which is typically what most of my farms do. And it's a very easy way for us to put more money away than we can with a traditional IRA. Right now, the rates of contribution is about $13,500 for simple plans. It's only about $6,500 for IRAs. So my simple plan gives my farmers the ability to put a little bit more money away. I'm also going to talk about a third business here. I have a business that supports the agricultural industry. It's a closely held business. Mom and dad still own most of the shares equally in the business, and they are gifting and transferring shares to the son every year. There are 2 children in the family. The son is going to take over the business. They have already decided and they've communicated. There's no issues about the fact that the son is being mentored. He's doing a great job. He's running the business nicely. But the question is, how do we transfer the stock? And the parents don't really want to charge the son any money. They don't want him to have to buy it. They don't want him to start running this business with a large piece of debt. So what they decided was, and again, I was referred in by the CPA, can you put together a large plan, something where we can get some really large dollars that we can withdraw from the business every year into a pension plan for the parents. We call that a defined benefit plan. So the way that this worked is we had a 401k so the employees could participate with a match. On top of the 401k, we did a defined benefit plan. Only certain members are allowed into the defined benefit plan, but the reason for putting it into place was so that we could overfund the parents. And then when we get to the estate planning piece, I'll tell you how we were doing the stock. But there's a lot of things that you can do in the pension area. And the reason that this becomes a nice solution is if we can get large dollars in the form of retirement assets to some of our family members, it takes pressure off the farm when they retire. If I can build a pension plan for my older generations and they don't need to take an income from the farm in retirement, that is a great issue to be able to solve. Okay, so let's keep moving. So we've talked about succession planning. It needs to be, it could be voluntary or involuntary. We hope it's voluntary. We talked about some methods for capitalization. We talked about retirement needs, selecting the right successor, putting a written plan in place, communicating it, and in this case, reviewing it every 3 years. So I want to move to estate planning. What is estate planning? The act of preparing for the transfer of wealth and assets at death. Actually, we want to prepare for the maximum transfer of wealth during life and in the most tax efficient manner. Estate taxes are not generally top of mind for you, but in a recent poll, 72% said they rarely or never think about paying estate taxes. 60% said that they frequently think about it, but they haven't figured out fair distribution among family members. And 60% said they do have an estate plan in place. So here again, estate plan is nothing more than the generation that owns the farm saying, here's where the farm's going to go. Here's where my life insurance will go. Here's where my jewelry will go. Here's where my old pickup truck that's classic, that's parked in the barn might go. You decide who gets what, how, and when. And we want to maximize the most to the beneficiaries, and we want to reduce estate taxes. More importantly, we want to make sure we provide liquidity. Here's some of the things that you might want to consider in starting with your estate plan. We've talked about what a living will is, a healthcare proxy, a durable power of attorney, a regular will, revocable living trust. We've talked about irrevocable living trust, and specifically for a farm, which is a business, some sort of buy-sell agreement. Your personal assets can pass by will, but your farm should have a more sophisticated business agreement. You should document all your assets. If you have a really good CPA, chances are you will get some sort of breakdown and you will have some sort of balance sheet and income statement at the end of the year. So why do we want to talk about estate planning? Well, because for farms, you have some unique challenges. The uncertainty around federal crop subsidies, the likelihood of estate taxes, because some of these farms can be really valued at some very high levels, but it's an illiquid asset. It is not an asset that we necessarily want to sell at the death of our owners. We want to keep the farm in the family. So that 37% at the bottom of the page represents the highest level of estate tax that you could potentially pay. 37% right now is the highest rate of tax that could be paid if you have to pay estate taxes. This is generally where I talk a little bit about Medicaid planning. It is really important that we think about the first question that was posed to us. That is actually something I am finding more and more and more. You know, farms that have planned for the next generation, and maybe even there's some life insurance and so on, but we did not plan for a long-term care event. We did not plan for a nursing home event. Medicaid is a brutal system that if ownership of the farm is in your name and you go into a nursing home and you don't have assets to pay for that nursing home or income to pay for that nursing home, Medicaid can levy ownership of the farm. They can force you to sell the farm or take out a very large loan in order to pay them against the farm. So Medicaid planning should become part of your estate planning. So where do we want to be? Well, we want to gift while you're alive, if we can. We want to avoid forced liquidation. We want to be fair to all family members, particularly those working on the farm. And we want to make sure that the farm is valued at your death. So here's a good little statistic. If for some reason you have not done some sort of buy-sell arrangement or valued your farm yourself, the IRS will do it for you at your death. They have this very kind way of showing up on your doorstep at death and saying, let's take a look at everything you own. Now, currently, there are some tax laws that we should be aware of. There is an unlimited marital deduction. In other words, I am married to my husband, Sam. If I pass away today, all of my assets pass directly to my spouse, and there is no estate tax due. An estate tax is just the tax that you have to pay the government when you pass assets from one generation to another. If it's a spouse, it goes from one spouse to another with no estate taxes. At the death of the second spouse, I've passed away, I've passed everything to Sam. When Sam passes away, he will now have to pay estate taxes. There is an exemption, however. So the first $11,700,000 of my estate is actually exempt from taxes. I get 11,700,000, Sam gets 11,700,000. Now, this was increased slightly before the Trump administration took office. There is a thought that this may change drastically under the Biden administration. Obviously, the world is going to have to figure out how to pay for this COVID mess. And one of the ways that they're looking at right now is lowering this exemption. You, however, have an annual gift exemption. It is thought that this will remain the same. So remember my family where we put the pension in place for mom and dad. We did the defined benefit plan, which we layered on top of the 401k. And we are giving close to $50,000 to $60,000 a year to each one, mom and dad, to help them prepare for their retirement. In turn, mom and dad are each gifting 15,000 of their shares to the son. Now, when we gift the shares of the business to the son, he's now entitled to some of the K1 profits from the farm or from the business. So in this case, it worked out really well. It wasn't a particularly sophisticated estate plan, but it was a great sophisticated retirement plan that helps solve this. So every year, the son gets $30,000 worth of stock transferred to him. The parents get somewhere between $30,000 and $50,000 added to their pension plan. So one of the reasons we like to bring in an estate planning attorney is because they can make you aware of all of these estate planning lifetime gifts. There's things like credit shelter trust, and there's ways to value the business and pass it using some discounts so we don't pay as much in taxes. So here's what we want to do. We want to avoid estate liquidation, right? We don't want to have to pay for estate liquidation, probate costs, legal and accounting fees. We want to be able to buy out any surviving members. We want to pay off some debts, and we want to be able to pay any estate taxes. And we do not want to have to say, gee, which property is going to be sold in order to make this happen? All right, now, okay, so I think I blew through another poll question. So Kristen, I think as we've talked about estate planning, let's launch poll question 6, please. What level of estate planning have you completed? A, we have a formal buy-sell agreement in the event of death, disability, or retirement of each owner. We have made provisions in our will to pass the farm business to a successor. We have updated our personal will, power of attorney, and healthcare proxy, but nothing to address the farm. Or we've done no estate planning. So let's see where each of you are on this level. Okay, so 17% of you, wow, some of you guys are super planned. This is awesome. 25% have said we've made some provisions in our will. Okay, at least everyone knows what your intentions are. Okay, 58% have said we've done some personal work, but nothing personally. Okay, well, I hope some of this has been helpful to that 58% then, because we do, you probably do need to address that, and you may want to ask some of the questions in the panel. Okay, so so again, ways to meet liquidity. If for some reason you don't have life insurance, so when we talk about preparing an estate, we generally talk about someone passing away, but a good buy-sell agreement will also address disability and retirement. On the death side, life insurance is such a flexible asset. I am currently settling 3 separate estates. One estate had a very clear-cut trust that was set up for the spouse. This is all of her money that she needs to live on is going to go into this trust. And she has not yet funded it or received a dime because it's taken us 18 months to solve a problem that came up during the, one of the family members decided that they were going to contest everything. And although they don't have a leg to stand on and they didn't win, they could hold up the beneficiary's money for what we are now at 18 months. She did, however, have a small amount of life insurance, and that is currently saving her financial security right now. If you don't have some life insurance, you may have to borrow some money. And a lot of time, lenders will reach out to me because we have a program with the SBA through Mass Mutual where if you need to acquire life insurance in order to close out an SBA loan, we try to do it within a 2-week turnaround time. It's generally an inexpensive term policy, but again, we're working with the SBA to make sure that you can close your loan and have what the bank needs in life insurance. All right, so we did a little bit of a poll back in 2018 with a number of business owners. Some were farmers. How will you divide up your ownership? Now we're going to talk about estate equalization. This is where I got one family member in the farm, but I got 1 or 2 or 3 who are not in the farm. I don't care. Let them all figure it out after I die. Or the children will divide it among themselves. They can figure it out again after I die, but I'll leave everything to the children equally. That's what my will say. Children working in the business get the business, the others get the assets. Okay, is that equal? Maybe, maybe not. Or I'm going to divide equally among all of my children, regardless of the business involvement. This becomes a problem if for some reason the parents say, once we pass away, the farm is worth this amount. All of our other assets are worth this amount, but we're going to put them all together and everybody gets everything equally. If the farm is the largest asset, and let's say I have 4 children and 1 is in the farm and 3 are not, that 1 child in the farm now has to figure out how to pay out his siblings. So figuring out the equalization is somewhat important. And I'm going to go to the next slide and tell you a little story. So the most recent farmer that showed up in my conference room, the husband is 100% owner of the farm, but everything that happens on the farm really is shared responsibility and decision-making with husband and wife. So they both showed up for all of our meetings, and the wife at one point said, my son is running the business, my daughter lives out of town and has nothing to do with the farm, but it's really important to me that we leave her some land so that if she ever decides she'd like to move back, she can have some of the land. And my first question was, have we communicated that to the daughter? Is that something she's interested in? No, she talks about coming back once in a while, but we haven't. Okay. Have you communicated that to the son that thinks he's getting 100% of the farm and now will lose some of the land that maybe he was going to use to eventually farm? This is land that was not being farmed at the moment, but was owned by the farm. So, you know, I immediately had to send them out of my conference room and say, hey, I'm the money girl, right? You guys need to go out of this conference room and you need to have a conversation about how that's actually going to look, because that needs to be part of the agreement. So, and I almost think as the husband was sitting there in my conference room, it was almost appeared to me to be the first time he had actually heard this conversation. So estate equalization needs to be part of your conversation. Okay, so we're going to talk about a rule that currently applies to the farming industry. In the Tax Reform Act of 1976, there was a section added 2032A, 2032A of the Internal Revenue Code. And it basically allows an executor of an estate, and I'm going to read this because it is internal revenue language. An executor of an estate may elect to value the farm or other real estate used in the family business for federal estate taxes purposes using one of the methods provided by this code. And this method allows you to reduce the value of the farm, hence saving you some taxes for estate planning. So if you're not aware of this special valuation rule and you do have a farm that maybe is going to be highly priced, here's some of the eligibility requirements. Now, there's a lot more to this rule than what I'm telling you. So this is really something that an attorney should review with you. First of all, are you eligible? Well, for the 5 of the last 8 years preceding the death of our owner, the farmland was owned by our owner, who's now deceased. The land must have been used for farming purposes. A member of the family must have materially participated in farm operations. At death, my owner must be a U.S. citizen. The value of the farm property must be 50% of the entire estate. The value of the farm land must be 25% of the estate, and the property must pass to a qualified heir. Now, some farmers will say, well, okay, we'll do that for the year that dad dies. We'll pass it to the son. We'll get the break on the estate taxes. And then the son says, I'm going to turn around and sell this puppy. Well, beware. There is a rule where if for 10 years after that estate tax break, disposition to a non-family member, or we're no longer farming at all, triggers a tax equal to the amount of the federal estate tax saved under the special valuation rule. So again, this is something that I think you should be aware of, but it's a pretty detailed rule and something I would encourage you to work with an estate planning attorney on. And that, I think, is going to wrap us up. If you've done nothing else today, I hope you've thought about reviewing your succession plan as well as your estate plan and maybe your retirement plan. And I think what I'd like to do is launch the last poll question, Kristen. Okay, so just so I know if this has been helpful to you at all, and you can feel free to give me some of your critique in the question and answer area. I do take your critique seriously. I only cry for a few minutes and then I just get better on the next seminar. So I've obtained the following from this presentation. A, I do have a couple of ideas and I feel more motivated to begin this process. B, I did obtain good information and I have a few ideas to continue with my current planning. C, this confirms that I'm following all the right paths in my current succession plan. I didn't learn anything new, but I know I'm doing the right thing. And D, I feel a little overwhelmed. There's a lot for me to do and I am not sure how to get started. So I'm going to give you guys all a minute to answer that. We'll look at the answers and then Art, I think I'm going to turn it over back to you once we look at some of these responses. Okay, so 33% said good. B, 58% good. That means you're doing some planning. And we had 17. Okay. Art, back over to you. Let's close out that poll.
Okay, well, thanks a lot, Marlene. And for everybody that's now on the line, as I mentioned at the beginning, we're going to have a panel, and the panel is made up of, in addition to Marlene, it's made up of Lori Shipman, and Lori works for FarmNet, New York FarmNet, and Ryan Hollings, who works for Alliance National Bank. Now, as we were going through and the questions that came up, I think applied a lot to the panel. And let me just ask one question to Lori to get things started, and then we'll open it up to anybody else that might have a question. Feel free to put your question in the chat box. We can also go back, Tamara, we can go back and look at some of the questions that came up and see if they're more applicable to the chat, to this panel than that maybe didn't get answered fully in the presentation. So let me just ask Lori. Lori, as you're listening to the presentation and as you're thinking of the questions, you know, I think we often talk about people approaching you and they'll say, we don't know where to start this business plan or this estate plan. It seems so overwhelming. And what will help us to get moving forward? Do you often get that kind of question? Laura, you might be on mute.
There. Can you hear me now?
Yeah, okay.
All right, good. Yes, that's the question we quite often get. When looking at this succession planning, there's so much that, you know, it's very overwhelming. And I think Marlene has already pointed out just the fact that starting out with a discussion within the family is a very important first step. But some people have a very hard time communicating with their family members, you know, other than their task list or something like that. So I just want to give you a couple of just simple things that you could do to get started. Obviously, calling SCORE or FarmNet is a good place to start if you're really struggling. But if you want something to start before doing that, also, one of the things is to do what is called a SWOT analysis. And I do this with a lot of my clients, just because they say, I don't know what to do. I don't, there's so many things to think about. So this just kind of helps them to focus. And you could do that as an individual or for the business as a family group or business group. Just take one single sheet of paper, make it into 4 quadrants. The first thing in a SWOT analysis is your strengths. So things like we have great resources. Our fields are very productive. We have a solid foundation of understanding of how to operate the farm. Then the second is your weaknesses. Well, we have some lack of understanding of how to save on taxes, or we can't communicate well within our family, so we don't know who's doing what. The other part is your opportunities. We have a family succession opportunity, and it looks like it's going to be a good fit because they have better computer skills, so we can put our records on the computer. Our neighbor's about ready to sell, and that property would be great for us. And then also looking at the threats. And of course, in this past year, and as we go on, COVID-19 has been a huge threat because it's changed how we do a lot of things. And also, markets had gone a little crazy for a while. So that's just one simple tool to use. Another one is just doing a brainstorming session, because what you're doing is just trying to get people to start talking about anything. And so in a brainstorming session, you let people say what they want to say. It can be funny, it can be outlandish, it can be perfect, but a lot of good ideas have come through brainstorming. But just to let you know what New York FarmNet does, we have financial and personal consultants that go out as a team and work with farms. With COVID-19, we did have travel restrictions and not being able to go on farms. That's opened up somewhat, but we can also do online with clients. We are free and confidential to New York farms, and we are available. We do have consultants throughout the state, but we generally ask people to call our office, which is located on Cornell campus. I'll give you the number. I'm sure it'll be included later. I can type it in the chat. Our number is 1-800-547-3276. That number is answered by a person 24 hours a day. During the nighttime hours, it's an answering service, but we do try to get back with our clients within 24 hours. And then they can also, if they're like me and don't like to use the phone so much, you can also go to our website at NY FarmNet, FARMNET.org, and right there on the front page, you can ask for help, and it will email us your question, and then we will get back to you. And that's ORG at the end. Okay.
Yep. You got the wrong key, Kristen. ORG. Lori, where are you physically located?
I'm located in Livingston County.
Yeah. I see.
And work with people. I have worked, 2 or 3 hours away at times. I am a little more limited now than what I used to be. Our consultants are, like I said, all throughout the state. Our main office will help to connect you with the person with the expertise that you've asked for, as well as location. So it's just best to call that number, and then they can decide who's best. If you know one of the consultants and want to work with one of the consultants, you can request that. It just is generally best to contact through our main office.
Okay. Good. I don't see that well, maybe there is a question coming up. Is there a question coming up, Tamara?
Yes,
Yeah.
yes. Somebody has asked if you could provide the attorney's names for farm, property, estate, and Medicaid. Do you have attorney
Okay.
recommendations?
Yeah, what part of the state are you in? Can you just give us the reason why I say that is that, that many of the estate planners and attorneys are more regional and not
Mhm.
across the state. So
She's in
Okay.
northern New York by Watertown.
by Watertown, okay. Well, I know Watertown is covered from a score standpoint. Watertown is covered out of our Syracuse chapter. And one of the things that I can do after this meeting is contact the Syracuse chapter and ask them to get in touch with you. Or maybe it would be easier, you'll have the contact information on the cells to actually get a hold of the Syracuse chapter and request that they assign a mentor to you, and then you can work, that person can help you determine who are estate planners and estate attorneys. I think that would probably be a little bit easier than me trying to do that. So does that help at all? Okay, good. I saw your note. That's
Yep.
good. Yeah, because I know that the Syracuse team goes to Watertown on a regular basis. So, and they probably have people right in Watertown that are part of the chapter. Okay. Yeah,
Hey, Art.
I think the question that just came up was also from the same person who asked the original question to Marlene. So I think it would be very helpful for you to sit down with one of the SCORE people or one of the FarmNet people, or both for that matter, and just have a meeting where they can provide you with some recommendations as to contacts. Because as Marlene said, so much of the information is legal in nature, and it's really important to have someone that's is sophisticated enough from a legal standpoint to be able to guide you in the right way. If you haven't done that, I think that's an excellent starting point, don't you, Marlene?
I do. And Art, I just did a quick Google while she was asking that question about Watertown. And I know as an advisor, when we're looking to develop a relationship with a new attorney, we always go to the local estate planning council. And there's generally an estate planning council in every area of New York State. So I just Googled this, and this was the Estate Planning Council of Central New York. And generally, that's where advisors are looking for other advisors. So it's certainly a website where anyone can go in and you can start to look at who's in the lineup, who's the membership. I think you can also call their number and say, I'm looking for a referral for a specialist in these areas. You could probably call the Estate Planning Council in your region and ask them for somebody that might be good in the farming area, somebody that has worked with farmers. Because I think when we talk about that assessor, that's where we have to realize we really need the specialist, right? That is a very complicated, unique situation. And, you need somebody that kind of knows all those rules.
Yeah, and I think as I was listening to that question at the very beginning, and the person talked about an assessor, that's a very narrow look at the whole estate planning arena. And in this particular case, it sounds like maybe that wasn't answered quite the way it needed to be for the individual. Yeah. Okay, are there any questions coming from the field, I should say?
No, we're clear.
Okay, let me ask Ryan. Ryan is the bank specialist. And, from a financial perspective, I know you deal with agriculture as your one of your areas of concern or one of your areas of expertise. And from a financial perspective, where do we start to get the information that we need for a farm family?
Yeah, thanks, Art. There's two parts of that I want to answer. The first one is when you start going down this path of what's next. And it's been said a couple times today, I won't spend a lot of time on it, but I think it's really important to do some soul searching and some goal setting and thinking internally. What do you want to see come out of this? Where do you want to be in 3 to 5, 10 years? Is it a sunny beach and umbrella drinks, or is it involved and close by? And I think it's really important to first figure out for the decision makers, what do they want to see before they start engaging in the process. With that said, from a financial standpoint, I think it's really important to enter this process with a good understanding of what you currently have from a financial perspective, from an asset, from a liability standpoint. And I was actually surprised that in the poll earlier, there were no bankers mentioned on the, I may just have a higher opinion of what the industry is. But with the clients that I work with, we are more than happy to come out to the farm, to sit there, with our production ag clients. We do that annually, to go through a balance sheet, to fill out what assets there are, if there's livestock, crop inventory, and then liabilities. We go through that detailed picture. So that balance sheet, an itemized balance sheet, it's a really good picture of where you are financially on that date that it's filled out, and to have that fresh and in your hands when you enter into the succession planning conversation, I think is really important, because it's going to help guide some of the mechanics of how things are shifted, whether they're sold or transitioned on to the next generation. So have the current financial information in your hand when you get started is a key recommendation. And don't hesitate to reach out to your bank or banker, the lender, to ask for help in that. They likely have up-to-date records for you and should be willing to help you out through that process.
Now, Ryan, you work a lot around the Finger Lakes area.
Yep.
And Lyons is, your reach is that area. Do somebody that's in Watertown or somebody that's in Millertown or something, or in Binghamton, do the banks generally have a person like you that specializes in agriculture within their commercial loan departments?
I would say typically, yes. If you're in an area that has production agriculture, if that's a business that's in the area, there typically would be a lending institution that would want to have a product for that, and they would likely have someone that does that. I know for us throughout the Finger Lakes, we have a 10-member commercial lending team, and about half of us have agricultural lending experience or are charged with doing ag lending in addition to more typical real estate and C&I and commercial lending. So it's a big focus for our institution, but I know that it's a focus for many other institutions. And in Watertown, I know there are lenders. There's the farm credit system that is prevalent pretty much throughout New York State, the different offices that they have. And then there's some other community banks that offer ag lending throughout the state. Biased, I think community banking is a great model. There are people involved in the communities that are familiar with the nonprofits and the clubs and the PTA and that kind of thing. And to have that type of a person on your team, or your in your corner when you're going through a process like this, I think is something that can be very helpful.
I think
Okay,
there are two other resources that I might mention. One is the U.S. Department of Agriculture has one of their departments is a farm service agency, and they do lending and support of agriculture. So they would know about banks or other resources in the area. And then we also want to remember the Small Business Administration, because farms are businesses and they would know also about resources. So that's the kind of thing that all of the people that are on the panel today work with other resources so that they can help you out, reach out to those other people and network.
Yeah, that's a good point, Frank. And I was thinking of that when Ryan was talking, and I know Marlene also mentioned this as part of the presentation, is that look at it as, as your team, your banker, your attorney, your estate planner, your consultant, whether that's SCORE or FarmNet, as someone that you bring to the table. And I think all too often, people think, well, gee, if I contact an attorney, the clock starts and I'm going to have to pay a big bill. And most often, and you'll talk to an attorney to get a feel, is this a person that I can work with? Is this a person that has the expertise that I'm looking for? And those sessions are generally not charged. You're trying to feel each other out to see if that's is a person that you can feel comfortable working with. And when you put a team together, they're not always going to be in the same room at the same time, but you're the key person. You're the one that's going to reach out to a banker if you need to. You're going to reach out to the estate planner if you're going to, or the attorney when you're going to need them. And that way, if you build a relationship, it doesn't come down to a crisis moment where you're looking for someone to help you at that point. Okay. Any questions from the field? I was thinking on the panel we'd end up with a bunch of questions here, and we wouldn't wouldn't have to.
Yeah, it's
ask
clear.
them.
The queue is clear. So if you guys have questions, please pop them in the Q&A.
Okay. Lori, anything else come to mind from your standpoint, from a guidance standpoint, that you want to provide? I think you're on mute.
Yeah, there we go. No, I think Marlene's pointed out some very important parts to her speaking, and just don't be afraid to ask for help. Even as a FarmNet consultant, I can't give you legal advice. I can't give you, tax advice or anything, but I certainly can help you find the resources. Any of our consultants can. And some of them are retired bankers. Some of them have worked in FSA. We have the personal consultants that I think when you look at succession plans, and Marlene pointed on this, a lot of times it's that family conflict or lack of communication that's a real puts on the brakes when you're doing a succession plan. It's not easy to navigate some of those things. You have built up a relationship, and sometimes you have to get beyond that to start talking the business part of things.
Yeah. Okay. Ryan, anything else from you from the banking perspective, or just general? You're working with a lot of farms. Anything in general that we haven't covered?
Really, just to underscore the importance of communication and not to
Yeah.
assume that the next generation or that your business partners know what you're thinking.
Yeah.
Have it out there, have an open and honest discussion, and then be prepared for feedback. And it's not always what you expect, but it is good to have it out in the open. And you've got to follow through and have it in writing too. Once you get in through this process, you get all these things opened up. Make sure you do follow through and have it in writing so that it can be carried out by those that aren't you if you're not around to make the decisions anymore.
Yeah. So how many times have we heard that today, right? No, it's so important. And
Yeah.
Marlene, how about you? Anything less that you want to wrap up with? You're on mute.
There
You're
we
on
go.
mute.
Yeah.
Yeah.
People are looking for the mute button in my life.
Yeah.
So I would say, I think I've given you a lot to think about, but it is true. It is, getting it started and getting something working and just communicating. Sometimes I think what we have to do is small chunks, like, set one thing that you're going to work on every 90 days. I said to my one farmer, hey, listen, what do you, how's your new third generation working out? And he said, well, we're working on this, right? And taking things in 90-day chunks. We're not going to swallow the ocean whole, but, take it apart and just piecemeal it. And as slow as it is, just keep moving down that road where the next generation is learning the trade, coming into the business, and, take it one little bit at a time.
So we do have a question that's come in, Marlene. It's addressed to you. Could you further explain the closely held family business valuation tool that you mentioned during the presentation?
Yep. So we usually collect, we have to get at least 3 years of tax returns, but my valuation number will be a little bit better if I can get 5. So I get 5 returns from the business and or the farm. And then I try to get 5 tax returns from the personal return, because numbers from both of those go into this report. And all I'm doing is actually taking numbers. There is a little bit of a kind of a questionnaire that we start out with, which is, do you know who your successor is? Are you set up as an LLC? Are you a sole proprietor? So there's a couple of pages of some personal questions. We take the tax return data, we load it in. I send it off to an estate planning tax attorney in our back office. They put all the numbers together, and then it takes about 2 weeks, and they turn out this 12 to 13 page report that basically says, here's the value of your farm if you're doing book value, here's the value of your farm if you want to look at liquidation. And it's just a template and some numbers for you to start off with to start that conversation. If you're going to formally gift under IRS rules, my valuation is not considered a formal valuation by the IRS. It is something that was just provided to us at MassMutual for advisors to get the process started. Because what we found out was, in order to do some of this planning, we got to put some value on the business. And people would say, I'd go back a year, hey, listen, do we have any business valuation? No, we haven't done that yet. So 2-3 years go by, and we've lost a lot of time and momentum. So MassMutual came out with this tool and said, here, this is at least a starting place. And so it's pretty turnkey. The biggest homework assignment is on you guys to get me the tax returns.
So that's a tool that you use. It's not a tool that's that FarmNet has access to or someone else.
Correct. It is available. It is available for financial advisors who are affiliated with MassMutual. And
Okay.
MassMutual also has a separate division under their closely held business area that is working with SCORE and USDA that also works just with farms.
Okay,
And
so
the
that latter question is coming from the individuals up in Watertown. And, so if she's interested in using that tool, would that be someone that she'd have to contact through the local Watertown area to see if there's a match mutual, or is there some way that you can put her in contact with somebody?
Yes. So if, what I would do is I would go out to MassMutual and tell them that it's someone in our farming area, because you have to have a certain number of requirements. Like I'm a CFP and I have so many years in the business. So you have to have some requirements in order to be able to discuss this. So if I can find a MassMutual advisor in the Watertown area, I would just refer her. If we can't, I will do it for her. Because with Zoom and electronic capabilities, I'm actually licensed in 12 different states, but I think it would be better for her to have somebody locally. And the second question came in, is there a fee for this? No, MassMutual doesn't charge me anything for the software. So I don't charge the clients anything to prepare it.
Okay, so Helen, you're the one that's listed that question. Do you want to try to, Marlene, will you provide a contact for her, or do you want to follow up with her?
Yeah, Helen, why don't you follow up with me directly? And we're going to fix my email address in there. So it's Datillo at Financial Guide. And I think when you're going to do the questionnaire afterwards, right? And I think they have, Helen, in your questionnaire, you could say, I want Marlene to reach out to me, and then they will allow SCORE to give me your contact information. So let's do it that way.
Okay, so Tamara, have you got a couple more build up in the queue?
Yes, I've got one that says, what do you do when the oldest generation, which is 87 years old, refuses to do anything about planning, and the third generation is ready and willing to take ownership at 23 years old?
Oh my gosh.
And
You know
that is
what?
not just farms, because I was in the family business too, same thing.
You're right. It is not just farms. Well, first of all, this is not going to help you, but starting earlier is always, sometimes if I have a generation coming in, I say, listen, get 10% out of the gate, right? You don't have to have the controlling interest, but if you're going to commit to this, tell them you want 10 to 15% just to walk in the door and start to run the farm. And, if you leave, it has to go back. I mean, you can do that in a legal agreement.
One thing I'm going to suggest on this one is that I've talked with Lori Shipman a number of times about the services that FarmNet provides. And like Lori mentioned before, FarmNet does both the financial side, but also I'll call it the social side. And it might be, I assume the person that's asking this question is the second generation or maybe the third generation, but it might be helpful to you to contact FarmNet and ask them to be the catalyst to bring the family together. And this will be there's no question it'll be a tough question, but the FarmNet professionals are skilled at that. Is that correct, Lori? You're on mute.
That is correct. And it's never easy discussion. And like Marlene said, it would be so much better if this would have happened when he was 60, but you can't go back now. So I'm sure what she was prepared to say was, you may or may not be able to change their mind, but sometimes I think she had pointed out also earlier that, have an attorney speak with them and say, listen, this is what's going to happen to all your hard work if you don't do anything. And here's how we could possibly, create a better situation. And likewise, if working with a consultant from any of our organizations, I think the same thing would be said. You've worked so hard for this, and find out why they're not willing to let go. I think it's important for people to realize that letting go of something that you've put your whole life work into is a grieving process. And I think once we identify that's the problem, maybe there would be some movement elsewhere. But
yeah, so what I hear is, that's a very tough situation between family members. And, having someone to help you, quote, break the ice a little bit is probably the best way to go.
absolutely.
Okay. Tamara, anything in the queue?
No, the queue is clear.
Okay. Well, I think that probably, we probably could go on all day with this subject, because it is, for lack of a better word, a touchy one. I mean, it's personal, and you need to deal with it personally. I think the main thing is, as everybody has said, Ryan, Lori, Marlene, Frank, myself, communications is the key, you know, to get the issues out on the table and start to talk about them. It might be just water drops at first, but you know, you've got to be able to start to address these things. It won't happen just spontaneously. You've got to take some energy to make it work. So I think we're going to wrap up for the day. I hope you all have had a learning experience. I hope you've gained from this. Okay. Well, say goodbye to everybody. And I hope that we've been helpful to you today. Bye-bye.